Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The International Monetary Fund urges countries to put up buffers, with global public debt projected to go beyond 100% of GDP by 2029. The government seeks to recover insurance claims tied to ghost flood control projects. And dozens of journalists walk out of the Pentagon due to a new media policy. First, let's check on how global financial markets performed overnight. U.S. stocks ended mixed as strong earnings from Morgan Stanley and Bank of America offset growing China-U.S. trade tensions. Morgan Stanley shares hit a record high, while Bank of America also gained after both banks beat Wall Street expectations for third quarter profits, boosted by strong deal making.
Well, I mean, it's been kind of an interesting couple of days. So sort of what we see going on with the market today is, we had a big sell-off on, the continuing trade war, if you will, or the back and forth between President Trump and Xi in China. And then we sort of, rallied back off of that on Monday and Tuesday. Yesterday was another pretty good day. So, I imagine there's probably, some folks that are taking profits. I think the market overall is in a pretty good place.
The Dow Jones Industrial Average down flat with a downward bias. The S&P 500 higher by 0.4%, and the Nasdaq up by 0.7%. Over in Europe, markets also closed mixed. The UK's FTSE down by 0.3%, Germany's DAX down by 0.2%, and France's CAC 40 higher by 2%. Here at home, our banks keep their growth momentum, showing the financial system's strength amid slower global markets and political uncertainty. The total resources of the Philippine financial system continue to grow, up 6.3% year-on-year in the first 8 months of 2025. Bangko Sentral data shows total resources held by banks and non-bank financial institutions rise to 34.577 trillion pesos as of end August, from 32.513 trillion pesos a year ago. However, that's a slight dip from the 34.592 trillion recorded as of end July. The figure covers deposits, capital, and debt securities, a key measure of the sector's capacity to fund business expansion and economic growth. RCBC's chief economist, Michael Ricafort, says that the rise is driven by strong double-digit growth in bank lending, particularly in consumer loans. The International Monetary Fund is sounding the alarm over soaring global debt levels, warning that without reforms, the world could face a new era of fiscal strain. The IMF says global public debt could reach 123% of GDP by 2029, its highest level since 1948, and continue rising thereafter. That's just below the post-World War II peak of 132%. The fund is urging governments to rebuild fiscal buffers and to restore discipline, stressing that mounting debt could limit public investment, and drive up borrowing costs and weaken global growth. A crucial test of government accountability as officials move to recover insurance claims tied to ghost flood control projects before the year ends. The Insurance Commission is working with the Public Works Department to fast-track the processing of surety bond claims from contractors and insurers linked to unfinished or non-existent projects under investigation. Up to 30% of a project's contract value may be reclaimed by the government. DPWH Secretary Vince Dizon stressed that the filing of criminal cases before the Ombudsman or the Sandigan Bayan will not slow the recovery process. A digital push for better governance. The Finance Department is rallying both government and business leaders to fix tax and compliance gaps through technology. Finance Secretary Ralph Recto says a multi-sectoral working group will review existing tax circulars and identify digital solutions to to improve tax assessments and collection efficiency. The private sector is being encouraged to join the DOF's digital drive, especially in modernizing systems at the BIR, the BOC, and the Bureau of Treasury. Recto thanks industry leaders for their support, saying that the private sector remains the economy's main engine with over 32 million workers and a crucial role in sustaining growth. A warning to investors and a message to scammers. The government is launching a new crackdown on illegal investment schemes as 3 groups face charges for soliciting funds without authority from the Securities and Exchange Commission. The commission says the DOJ finds enough evidence to indict Eaton Phil, non-specialized wholesale trading, SCET, Collins Corporation, and Hector Aldwin Liao Pantanolanas Group for violating the Securities Regulation Code. Eaton Trading offers investments in meat products with promised returns of 20 to 50%, while SCET Collins claims profits ranging from 3,800 to 1.09 million pesos. The DOJ is recommending charges against their founders, directors, and more than 10 agents for operating without licenses, part of a broader government drive to protect Filipino investors from fraudulent schemes. Now, the Philippines was poised for its first ever A credit rating until corruption concerns prompted rating agencies to hold back. Finance Secretary Ralph Recto admits that the ongoing flood control probe has shaken confidence and stalled what could have been a major milestone for our economy. Now, with investor sentiment weakened and an estimated 8.8 trillion loss to corruption over the past decade, more than the entire 6.8 trillion 2026 national budget, markets are asking how long the economy can absorb the cost of governance failures. Joining us now is First Metro Investment Corporation's Head of Research, Christina Ulang, to talk about growth, credibility, and the policy trade-offs ahead. Good morning, Christina.
Hi, good morning, Maiki. Happy to be here.
Yeah, always good to have you, Christina. Okay, let's start with this, Christina. Secretary Recto claims that we were near an A rating before the corruption scandals erupted. Given the trade tensions that we experienced this year and the slower growth outlook, how realistic was that target and how far back have these issues set us?
I think it's a matter of managing expectations, and it's nice to know that the government is very much aware of the costs involved. We are still growing, and I think they're going to work harder to keep that growth intact, sustainable until 2026. Of course, the BSP has sounded some caution that the growth outlook has actually re- reduced a bit, like their forecast was 5.3% coming from 5.6%, but still we're one of the best in Southeast Asia. 5.3. Thailand and Indonesia are way below us. Of course, Vietnam is higher than us, but I think the important thing to focus on is really how policy is moving to shore up growth towards 2026. And I think the policy rate cut will be aggressive, and the government with its 6.8 trillion fiscal budget for 2026 are both going to be supportive. So the critical thing is investment appetite on the part of the private sector.
Growth has decelerated, Christina, but it's still solid at about 5.5%. Secretary Recto claims we were near that coveted A rating. But with the trade tensions this year, how realistic was it for us to even to reach that A rating over this horizon?
I think I think what's really critical is for management to manage growth and at the same time keep a lead on the budget deficit, because the credit rating agencies are going to be very watchful of the credit rating, the performance of the economy in terms of growth, our ability to stick to our fiscal consolidation program, which means we are going to be like keeping a lead on the 1.5 trillion budget deficit until 2028. Our commitment was like 4.3% of GDP by 2028. So this is going to be this is going to come under very close scrutiny, and that depends really on how we perform in terms of our growth outlook.
Yeah, you mentioned fiscal health, Christina. The 6.8 trillion national budget for 2026, that's a historic high. That allocates 1.91 trillion, or nearly 28%, to debt servicing, with so much going to debt payments. how much room does the government really have to spend? Especially when you think about it, much of the budget also goes to maintenance and operation. How much does our government really have to spend to spur growth?
Mhm. I think the investment community and investors, even credit rating agencies are looking for would be the infrastructure spend, because the budget for that must really be close to 5%, and we are below that because of its multiplier effect. It really has a big impact on the growth outlook. But the BSP is working, I think, over time in order to bring down the cost of money so that the private sector participation will be in a bigger way. The capital markets will be functioning to support the funding requirements of the corporate sector. So I think those would be the one to balance the difficulties that we are now encountering, given the governance issues swirling around the flood control. So I think the focus will really be on shoring up growth and encouraging the private sector to participate in the growth process. And one thing that's really very notable was the announcement of the BSP to focus on the investment appetite of investors. They're now including the Philippine Stock Exchange, the market, how the market is performing, as one of the key indicators that they are monitoring in order to measure risk appetite. So I
Yeah.
think there is really a concern that investment spending might slow next year. It's not really consumption because inflation is low already. Trade is really very uncertain, our exports at risk. But the investment is the one they're now focusing on. And I think government is, on the other hand, focusing on the budget deficit. They're actually introducing new taxes to show to the credit rating agencies that the Philippine economy is going to be on track with respect to the fiscal consolidation plan. So these two, the fiscal support and at the same time the policy support coming from the BSP, are all going to be encouraging the private sector to continue spending on their capital expenditures, to be on target with respect to their funding requirements also. Because if you're going to look at the scandal of 2013, uh, that ended in a matter of 6 months. So if we are able to transition and find a credible solution to all of these governance-related issues, then we can see maybe the PISA recover as early as next year.
Yeah. Talking about the governance risks, you mentioned that the BSP only used to look at factory data, and now they're really taking a look at the PSE index. It tells us a lot. We're seeing the governance risks priced into the PSE index equity valuations. The PSEI is so sensitive. We're trading at the widest discount to our Asian peers in 16 years, Christina. How deep would you say is this crisis of confidence, and how much has the flood control corruption scandal set us back?
Mm-hmm. Well, beginning of the year, year to date, the PISA is down like 7%. And from the highest of 7,500 late 2024, we are now down by 19%, which is not very far from what happened during the Janet Napoles scandal, the PDAF scandal of 2013. There was a correction only of us. There was also a correction of as much as close to 20% during that time. But as soon as the Supreme Court declared that the FIDAP was illegal, there was a big celebration, like it was a credible solution, a resolution of the issues, and then the market rose 36% the next year in 2014. And I think if the market now finds a credible solution to the all the governance related issues, we may see a rally, because during that time in 2013, the BSP key rate was at an even higher rate of like 4%, and now we are approaching 4% also. We may be coming down to 4%. Inflation then was 3.5 in 2013, and we're even at a lower rate of like 1.7%. And the peso was depreciating then to 46, coming from 43. We are now stable, 58, 57, 50, 58,
Yeah.
57, 80. And all of these things, I think, are very manageable once we really find a credible solution to all of these governance related issues.
Correct.
I think the market, the PISA, is going to recover 2026.
Yeah, a credible resolution to all of these governance issues. In the meantime, fixed income is going the other way, ignoring all of the noise, especially given our inclusion in the JP Morgan Emerging Market Bond Index. Christina, what is your outlook for fixed income in this environment?
Mhm. Well, there is no sell-off in the fixed income market. There is a big rally happening in the fixed income market because we heard the BSP make this big policy rhetoric that they're going to be like cutting, and they have adjusted the sweet spot. They ought to be targeting like ending the rate cutting cycle at 5%. Now they're saying it may be close to 4%, which should give a lot of liquidity to the market, fuel a liquidity rally in the PSA. Not now, next year. This might be the bottom if we compare it to the similar scandal that we saw in 2013. We are really at a better position when it comes to liquidity because the rate cutting cycle is about to happen. The fixed income market is pricing that in very aggressively. That's why the 10-year has come down like 5.9, 5.89. But the 5-year has come down really in a
Mhm.
big way from 6%, the last RTB auction, coming down now to 5.7 and maybe 5.5, 5.5, 5.6 in the near term. So for safety and because inflation is low and there is uncertainty in growth, the fixed income market is rallying. Those three
Mhm.
elements are present. And when those two elements are present, the rally is always there happening in the fixed income because investors are looking for safety and they're looking for certainty when it comes to the cash flows and income. But I
Yeah.
think next year we're gonna have rally in both the PSA and in the fixed income market combined.
Okay, that's something to look forward to, Christina. No matter the environment, investors can't be too cash heavy. They're going to have to park their cash somewhere. Thank you so much for your time this morning.
Sure. Sure. Thanks. Bye-bye.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Thursday morning. Right now, the Nikkei 225 is in the green, higher by 0.7%. Hong Kong's Hang Seng Index up as well, up by 0.2%. Same as the Shanghai Composite, up by 0.2% as well. Whereas the Singapore Straits Times Index is going the other way, lower by about 0.5% in early trade. Here at home, Philippine shares extended their winning streak yesterday, Wednesday, lifted by bargain hunting and a stronger peso. The main gauge climbed 0.3% to close at 60.94, its third straight day in the green after briefly touching the 6100 level mid-trade. Investors continued to pick up lower-priced blue chips, with sentiment improving as the local currency held firm against the greenback. Trading remained modest at just under 8 billion pesos, while foreign funds were net sellers. Analysts see immediate support around the 6,000 level with near-term resistance at 6,150 as the market tries to hold its gains heading into the end of the week. Taking a look at our market today, the PSE index as of 10:20 is trading to the upside, higher by 0.5% to 61.24. The broader all shares index is up as well, up by 0.4% to 36.84. Taking a look at the sub indices, all are trading to the upside, except for the industrial counter. It's limiting the market advance down by just 0.1%. Oh, just about 0.2% in early trade. Now, total volume is at 821 million shares, valued at hefty 2.45 billion pesos. Market breadth is positive with 83 advancers, 54 decliners, and 50 stocks unchanged. Taking a look at the currencies, the peso opened at almost 58 flat against the dollar, up from its previous close of 58.06. Now, a new window opens for energy cooperation in the West Philippine Sea as Manny Pangalinan's group explores the possibility of reviving oil and gas talks with Chinese firms. Foreign Affairs Secretary Teresa Lazaro confirms the discussions but clarifies there are no formal agreements yet. The matter came up during Tuesday's Senate budget hearing. In 2022, Pangalinan's group also engaged Chinese firms for a joint exploration in the West Philippine Sea, but the project did not push through. Earlier this month, PXP Energy Corporation, also owned by Pangilinan, received 3 new petroleum service contracts from the Energy Department for areas in the Sulu Sea and Northwest Palawan. Apex Mining is back in full operation at its Mako mine in Davao de Oro after authorities lifted the temporary suspension imposed following the magnitude 7.4 earthquake. Workers evacuated that site when the quake struck on October 10th, but initial inspections found no significant damage. The provincial government ordered a temporary halt to mining activities that same day, pending checks by the Mines and Geosciences Bureau and the Provincial Disaster Office. The suspension was lifted on October 14th, and Apex resumes mining and milling operations the following day. Apex, controlled by Ultra Bilyonaryo Enrique Razon Jr., reports a 70% jump in first half profits to 3.2 billion pesos, with revenues up 37% to 9.5 billion pesos. The Bank of the Philippine Islands extends its profit streak, with net income rising to 50.5 billion pesos in the first 9 months of 2025, reflecting the banking sector's resilience amid softer economic conditions. In a disclosure, BPI says that this is 5.2% higher than the 48 billion pesos posted in the same period last year. The bank notes that strong revenue growth continues to cushion the impact of higher operating costs and provisions as banks benefit from healthy loan demand and steady interest margins. The Yuchengco family-backed EEI Corporation completes its biggest strategic pivot yet, acquiring POGO operator First Orient International Ventures Corporation for 2.8 billion pesos. In its disclosure, the company said that it signed a share purchase agreement with KC Land Oriental Pacific Incorporated to acquire 100% or 46,805 common shares of FOIVC. EEI, whose major shareholders include the family of Martin Romualdez before he exited earlier this year, said the deal marks a shift from construction to real estate. FOIVC, known for operating Pogo Island, owns and controls 49 hectares of land in Cavite province. In a rare protest inside the Pentagon, as reporters walk out of the building in defiance of new media restrictions. More than 24 news organizations refuse to sign a new access policy that requires journalists to acknowledge stricter rules on press coverage. Under the policy, reporters could be labeled as security risks and have their Pentagon credentials revoked if they ask employees about classified or even unclassified information. Defense Secretary Pete Hegseth defends the move, calling the requirements common sense, saying they aim to protect national security. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.